Okay.
Yeah, I'm logged in now, the other box, and I started the recorder.
All right.
So if you want me to go, or you want to go?
It's up to you.
You
Whatever you
know,
want
let
to do.
me, if I can, Rich. I got this all set up. I can go ahead and just uh, show it real quick,
Okay. Yeah. Go ahead. Yeah.
and then we'll go over
Sure.
to your
Yeah.
machine.
It's no rush. I can get another a little hot toddy. I'll be right back.
You do have time, yes.
All right.
All
Hey,
right.
what's that oil trade, by the way? They'll usually do those tests of resistance again before it rolls. So, you're just, I'd say, out of your next contracts because it looks like it's going to pop up.
All right, so what I want to show real quick is how you could have had simply one or two trades on EMD this morning, and you would have pretty much been done early for the session for the day here. And what I want to start off showing is that here is the midnight. This is all Pacific time. So this would have been yesterday, Sunday, and then of course here was today. Just to orient you, this is a 12 and a 4 on EMD. So Sunday was here. See, the market started to sell off, and then of course here was this morning, was in here, and fairly precipitous sell-off. If you follow our pre-market routine, you probably noted that the Dow futures were down 120 and change going into the open. So that was over here. In our pre-market assessment on EMD, if you recall, we made note of the fact we had a couple of resistance levels sitting up in this 900 area, which of course now has become strong resistance, just hit its head back up here. And then right around this 898 level. So essentially what we do, without getting into a lot of detail here, is we sort of look at what happened in the previous sessions. Pretty clearly was in a downtrending channel like such. We all could have made note of that. We all saw it on the charts, pretty straightforward. All the equities were dropping similar to this. And then in our pre-market assessment, we simply look for swing highs and lows. And then we realize, if you watch our webinars, we go through this pretty extensively, that the market's going to do one of three things when the market opens. 6:30 Pacific, 9:30 Eastern would have been right about here, which is when the market, cash equity markets start trading. So in our mind's eye, right around the open, we're thinking it's either going to break up, it's going to go sideways inside the box, or it could break down. We're ready for all three directions, right? We cover this pretty extensively in our webinars. We do our pre-market assessment, we find the swing highs and lows, and then we're prepared for any of three directions. All right? Now, we see pretty clearly what happened here. We all remember what happened, right? I mean, you can see, I'm not going to go through a lot of detail of it, but the bottom line is that we had just this monster breakdown. Right around the open, just a couple of 3 minutes after the open, you could have popped a little short kind of right in here. You had a swing around 96, 896 and change, a little breakdown here, and then of course when it took the swing out, just a few ticks either side of 94, could have had a nice sell order resting in here, trend line trade or any manner of entry to get short. This was your opportunity basically right in here. Now, the nice thing about these markets is that if you miss these initial entries, it's okay, because if you notice down here, sometime later, about 6:40, so here we're about 10 minutes into the trading session, we get a nice little retracement up to resistance here. See it? See how it pokes its head and just touches resistance? See this right here? In this circle here, we kind of call this a resumption of selling. Probably heard that term before, resumption of selling, market starts to break down. And so we get into this sort of classic price pattern of thrust and retracement, thrust, retracement, and then she does her final punch down here around 645-ish, 650, this last sort of thrust right here down to 886. We talked about trailing a stop up in here, if you recall, and we got taken out of the trade just before it hit this 88 level. So, depending on your fill up here, how nicely you got filled, the overall drop from here, just in round terms, say call it 96-ish, down to this level here, close to 86, was about 100 ticks. But if you caught anywhere from 60 to 70 ticks of this, even if you got in late and caught the last 40, 50 ticks, this was still a beautiful trade. At $10 a tick EMD, this was could have been a $600-700 trade. And I know for many traders in here today, this would have been a one and done. That's what we were saying when we got over here to 7 o'clock. We said pretty much, if you nailed this short and you put a contract or two on, you're probably done and really don't need to start chasing the market around. But I do want to show what happened after that, because there was a couple of follow-on long trades, and I want to show those real quick, how those set up. Fitzroy, you've probably seen our recordings of the webinars. His question was, how valid are these pre-market swing levels? Depending on the instrument you trade, they're fairly solid, Fitzroy. In our pre-market assessment, we're looking for these levels, and these levels pretty much are going to drive our thinking as far as long and short and range bound. Spent a lot of time on Saturday morning and last week. For instance, Friday, if you recall, last Friday was an extremely choppy day, and we stayed inside the boxes of the equities. I don't know if you remember that. Does everybody remember that? But here, of course, today, Mondays, most days early in the week, especially if there's news, we get these nice big 100-tick moves, which gives us the volatility we need to make some coin. So let's look at the long side over here. This is not unusual. I Skype with traders about this all the time, and we talk about the fact that it's 7 o'clock most days, not every day. So you get this first opportunity from about 6:30, 6:34, 6:35, 6:40, all the way down till about 7. Here's 7 o'clock Pacific, 10 Eastern. And a couple of things tends to happen on the equities. If you get a bounce, you could get a roll. And of course, a continued sell-off. It would be continuation of the downtrend. Or in this case, of course, we've got a V-shaped type bottom here. See, we've got kind of a V-shaped bottom. See it? Kind of bottom out, no more fresh lows. We start to bounce and take out the swings. So we had a couple of nice long trade opportunities if you took them around 7 o'clock. First, we got this thrust up here kind of to around this 891 level. See it? Then we kind of set up a little consolidation, pulled back to support. We call this a regular bar probe, okay, regular bar probe. And then we get a resumption of buying in here. Now, you could have entered anywhere in this circle or even a break of this swing around, I don't know, 91.50-ish, kind of right in here. Would have been also a very nice trade entry long. And then, of course, you trail your stop. Unless you use Trendline Trader, of course, it would do it for you. That's in the Pro package. Put Trendline Trader right here. When it breaks, deploys the targets and stops and manages the trade for you very nicely. And then you got stopped out somewhere around just shy of 95 when it rolled over up here. Now this was a yellow bar probe that Rich called out here just before 7:30 Pacific. We pulled back very nicely into this 93.40 area. See how we get this little box of support in here? And then I think Rich called 94-ish. He said something about it. Watch this bounce at 94 to take a yellow bar probe long on EMD. And sure enough, you got this nice little bounce right here. It popped fairly quickly. This final last trade here didn't really get, you probably got 20, 30 ticks out of it if you took it. Nice little kind of pop right here at the end of the run. This trade here from 91 to 95, this was good for about 30, 40 ticks. About $300 to $400, $10 a tick. And then you might have got, depending on your fill and your exit here, you might have got another 20, 25 ticks. So there you had basically scrunch this down here, 3 nice trades on EMD here. Let me recap those again. So our pre-market assessment, we're looking for a break either direction from our support resistance levels. We stayed out of the box when it was in here. We intelligently took the shorts on the breaks of support, trailed our stop, got taken out down here. We see the bounce, V-shaped bounce, up it comes. We have an opportunity to take a long and then a yellow bar probe. And there's your 3 EMD trades for this morning. All in all, pretty good morning. I mean, you could have, even if you missed the shorts here and just took one or both of the long trades, you still had a couple of very nice trades over here. Now let's go over and see what it's doing right now. But before we do that, is there any questions on what's set up here on EMD? Questions on EMD trades from this morning? Everybody see this? Pretty straightforward. Pretty straightforward trades. Nice clean price action here today. EMD, ironically and surprisingly, was probably the best and smoothest of the 3 or 4 if you track NASDAQ, YM, Those two are $5 a tick. Roosty, of course, was very choppy. Yeah, Ray, I see your comments. You know, if you have questions, everybody has my Skype, right? If you have my Skype, you can be on Skype all day, all week. Most of you have my phone number. You can call me too if you want to cover, like offline. If you want to say, "Hey, Charles, you know, I really didn't see this setup or whatever. Some part of this is still confusing." Just simply get me on the horn, and we can go through it. Okay? Now, I think Rich wants to talk a little bit about how we came up to this resistance area at 900, where I think you popped in and took a short up here, didn't you, Rich?
Yeah, let me go ahead and do that. I mean, we could come back up and test, and that's why I'm already out of half. But yeah, let's go ahead and do that. So I'm going to go ahead and switch over.
Okay.
Should be able to see the EMD chart, right?
Yeah, we see a 16 range EMD
Okay.
chart. Yeah.
The only reason I'm using a 16 range, I'm not trading a 16 range, but I'm using it because it shows more of the movement. Okay, so here's where we started at midnight, and we basically were sold off all the way until maybe 15 minutes after the open right here. Okay, and you can see what they did over here. You see how they took out a support level, which was here. They just took this one out, which was here, and then this one held, okay? So then we got a sharp rally up here. And as we started to look, you had a resistance level here, you had a resistance level here, and you had a resistance level here, all right? So that's pretty sticky when it comes into that. Now, if you combine this with the following, okay, and what you're going to look at, so the first thing you're going to identify when you kind of get up into this no man's land here, right? We moved up sharply, right? There's no more really swing levels until here, here, and here. So you knew it was going to have some trouble here, right? And as a matter of fact, you see what they did, and this is why they're dirty dogs in the equities. This last swing level right here, they took it out, I think, by 1 or 2 ticks, and then rolled it, okay? That's why these equities, if you watch these time and time again, they do this. Now, that's part of the analysis. The second is this. If you do your Fibonacci retracements, you're going to see these cluster, okay? So here's our first retracement, and this is the point, this is the 3.382 right here, okay? Right in this area. I'm going to go ahead and put a drawing, a horizontal line there so I can move some of this stuff, okay? All right, so that's our first one. Get this out of the way. Okay, we had a second one. We're going to go from here to here. And this is the 0.50 right here, where they took it out. Let's put another line there. Okay, now let's go for the third one. Remember, we went from here, here, we're now going to go to here. All right. And so we're kind of in between. The 50 on this one is right here. The 618 is up here, basically holding the area. So the one that we actually hit was the 50, right? And the 618 was holding it. And then we can drop down. Let's see if we can do this without. No, I can't. So I'm just going to bring it down. We're going to do one more. We're going to link another one up from here and possibly even here. All right. Here's the 618 on this one. And we'll do one more. We're gonna link it up to here. That might be the 7.5. And that's a 7.5 right here. All right. So when we talk about these levels, basically what you had is you had a market that was moving up into this heavy swing area here. You had 4 heavy fib clusters right here together. Okay, that's like a money in the bank trade. Now we may go higher and continue to move through here, but at least you had about a 40 tick bounce off of here. Okay, yeah, you got to take a little bit of gas when you're in here, but not much. Does everybody see how that works? You have all types of clusters, and it's confluencing, as Bruce would say. It's confluencing. I don't think that's a word, but that's what it is. It's confluencing. That's how you can see some of these levels. So I mean, basically, you know, you had resistance, resistance, resistance. You knew it was going to slow down, and you had 4 Fibonacci heavy clusters here, going all the way from the 3.18 from up here to the 5.0 here, to the between the 5.50 and 6.18 here, to the 6.18 here, and to the 7.5 here, and they all just clustered big time. Okay, that's all I wanted to show.
Rich, that looks really good. I know some traders in here like to use the Fibonacci tools. Question from Hans here. Do you find the fib works also on the 12 range?
Oh yeah, it works on anything. The only reason I have a 16 range here is because it's moved so big. But if you had the 12 range or the 8 range, you can still connect these swings, and it'll still give you the same thing. I just used 16 here because we've had such big movement that it would be too the chart would be too stretched out. But absolutely, you know, you could put a 20 on here to get a, but it's the same thing. I mean, they're all going to, you know, what you're measuring is the swings. Absolutely, Hans. No, you don't have a lot of time. I mean, if you're trading 3 or 4 markets, you don't have a lot of time to do this analysis. But again, there's certain times when you want to use this, and this was one of them. When you get these long, big, protracted moves like this, you know, let's try to crunch this up a little more. Let's go the other way with it. We want to see what level maybe we would expect this to drop into, right? I mean, you see, if you come back right here, you see this swing high here. What do? We dropped right into it. Now let's take a look, see if anything else might have been working at that point. And what it was right here was the 0.50. This is the 0.50 right here. That's where we came from. So then we can check it here too. You know, it works going up, going down. It works the same way. This is the 0.50 here, and then the 618 underneath. So it's the same thing.
Okay, good.
This is a pretty clear setup down here. All right.
Bruce has typed in the definition of confluence. It says, he said, it's a place where things merge or flow together. Good. Excellent. That's right. That's right, Bruce. I had one last thing to show real quick because, by the way, I put in my Skype handle. Does everybody see that and my phone number? Anybody need to call me today or this week at all? Does everybody see my Skype handle and my phone number there? We got a conference call at 9, but shortly after that I'll be logged in the rest of the day. So everybody see that? If you need to get a hold of me today or this week anytime, give me a call on the phone or on the Skype handle there. There were some questions about some other instruments here, and I think it was Newman. Newman, I talked to you Friday morning, who Newman picked up quite a bit on our web free trial webinar. And the question was essentially, hey Newman, good morning. Why was EMD so smooth and the other instruments were so choppy? And if you recall early on in the session, we were calling, in addition to the EMD and RUSD, the Russell TF, we were observing NASDAQ and YM, which is the mini Dow here, $5 a tick. And if you noticed, after about 7 o'clock-ish, 6:45, 7, we did not make any more YM calls. Did anybody? I don't know if anybody noticed that. And here's why. See how this is our pre-market assessment. I just quickly put this on here. Of course, you see it was down just like all the other equities, trending down, trending down. And then here was our support resistance levels, and we called out the break, and of course it broke 40, and you got this quick little pop down to 10, and you might have got something out of this, but it kind of really whipped you around, right? So what I like to do is this. Since I have these 4 big screens, and you can do it with 1 or 2 screens, you just have to be very efficient in how you do it, is I like to keep an eye on a couple of different markets. I'll watch YM, I'll watch NQ, NASDAQ, because sometimes those trend with the other markets, sometimes they don't. For instance, over here, if you recall the EMD chart, let's quickly put these next to each other, sort of juxtapose them together. Notice the difference between EMD. When I was watching EMD bounce like this and start to really break up like this, right? Notice what happened with the YM. YM barely broke this resistance level, hit its head at prior pre-market resistance, and just never went anywhere. So if you see divergence on an instrument that you're watching like this, it's pretty much a clue not to trade it anymore, okay? Unless you're going to be very quick and stealthy and take these little pops, which in relation, of course, you see to these other moves here, which were 50, 40, 50, 60, plus moves. Over here, you're getting little pops for like 10, 12, 15 ticks. It's just, is it really worth your time at $5 a tick to chase this around? Probably not. Now, I want to show another thing over here. So what I'm saying is, in this case today, as I was observing YM, it was divergent from the other markets, and I felt after this point here did not warrant further attention. Now, there was another question that came in about how to deal with some of this choppiness. Let me show you something on NASDAQ real quick on this NQ chart here. Here's the pre-market assessment on NASDAQ. Here again, this is $5 a tick. We encourage a lot of folks in free trials, or if you're new to the futures market, to consider trading this instrument because it's fairly low risk. Most of your stop levels are going to be like 10, 12, 15 ticks, so you're only risking about $50, $60 a trade. With one contract, frankly, unless it's really trending, isn't going to really make you a ton of dough, but it's a low-risk learning instrument. If you put a 6 up, if you don't have enough screen space to really work with a 12 and a 4, or you're having issues with that, sometimes if you go up to a 5 or a 6, it'll kind of smooth the choppiness out a little bit. See here? See how it was still trending down? It was pretty clear. Whereas on a 4, if I put a 4 up here, it would just look like a choppy, soupy mess. So you did have a little short on NASI, and you had a little pop long when it here's your thrust retracement pop. Here's your choppiness around the open. Boom, she broke down. You got a little short trade. The only thing you have to do if you're going to bump to a 6 is that your stops, you have to really kind of watch the price action. Here you almost got like a little double, triple bottom. And when this started to do this, you really kind of wanted to get out, because if you waited all the way back to here, you hardly made anything on the trade. But this can smooth the price action out if you go with a 5 or a 6. Here, for instance, you had a nice little pop long. Here's our thrust, little trend change. We get a little retracement, pull into support at the breakout level at 72, and then boom, you get a little pop here. And then for NASI, that's kind of been it, just those 2 little trades. You had the pop short early, just like the other equities. You got the little bump, and then you got a little bump and roll here. Maybe you got, I don't know, 20, 30 ticks out of this, 100, 150 bucks maybe. But, a couple of these trades on NASDAQ, I was Skyping with some folks last week. They said they'd be happy with if they just made like $200, $250. In this case here, all you need is two trades on NASDAQ at like 20 ticks a piece, and there you are at 200 bucks. So just something to keep an eye on if you're looking at these like the NASDAQ and the YM. You have to be careful because some days they're they're not going to be as friendly as some of the other instruments. So it helps to have, keep an eye on this one, maybe keep your eye on YM, see if she's trending, and then keep another chart like an EMD handy where you're looking for breakouts and sort of the bigger moves. Realizing at $10 a tick, of course, it's going to be a little greater risk from an initial stop standpoint. Okay, guys and gals, I think that's all we had. Thanks for coming. I think we had a great morning. Most of you hopefully made a little bit of coin or some good coin. If you didn't, don't worry about it. There's a lot of the week left. It's only Monday, so we got plenty of week left to us. If you're in a free trial and you have questions, we have a support webinar tomorrow morning, 9 o'clock Pacific. We'll send out reminders and links for that. You're welcome to attend if you're in a free trial. That's for support for you folks. Any final questions before we wrap the session? I think that was it. Rich, Gary, you guys got anything else? We're pretty much done here.
Pretty much done.
Let me save the question log real quick, and I think we might have a wrap. Here again, everybody has my Skype and phone, right? You need to get a hold of me today. Give me about a half an hour or so, and I'll log in over there and we can talk. Hey, Marco, have a good one. Bruce, Luke, thanks for coming. Newman, have a good day, everybody, and we'll see you. We got a pro webinar tonight, right?
Yep, we got
for
one
subscribers.
tonight.
Yeah, subscribers, pro webinar. So keep an eye out for a link to that, and we'll see you tonight.